Welcome to the Real Estate Ballers Show. Today, we have a very special guest who is an absolute powerhouse in the multifamily real estate. So get ready, friends, to dive into the exciting world of syndication as we sit down with none other than Brad Sumrok, the multifamily expert. With decades of experience and an unparalleled passion for his craft, Brad Sumrok has become the go-to authority when it comes to multifamily investing. His expertise is invaluable. And today, he's here to shed some light on syndication and giving you a glimpse of what's happening in today's market. He will also address the elephant in the room. What could go wrong? So join in, my friends, because this interview is jam-packed with valuable insights from the one and only Brad Sumrok. Okay, so today we've got Brad Sumrok in the house. Hey, Brad, can you give us a quick introduction?
Hey, how you doing? It's good to be here. And yeah, so actually I got started in real estate in Houston, Texas, by the way. I don't know if you know that, but I graduated college in Pennsylvania, moved to Houston, got a job as an engineer, and tried to climb my way up the corporate ladder and just never really got there. And I like to say I was an average employee. I came in late, left early, took my lunch, took my vacation, and my bosses would always say I didn't have what it takes to move up in the world. But I just wasn't passionate about what I was doing, and I wanted to make more money, so I went back to school, got an MBA. I thought that would be the ticket. Wasn't the ticket either. Actually, it was back in the year 2001, or the year 2000 or 2001, I picked up the Rich Dad, Poor Dad book. And that book motivated me and inspired me to seek out specialized education instead of formal education. And if you ever read the books, Kiyosaki says that specialized education can make you a fortune and formal education can get you a job. So I started going to real estate investing seminars in Houston, Texas. And I did that in 2001. And so look, it wasn't the book that changed my life. It was the action that I took. I sought out education. I sought out mentorship. I invested in myself. And that's the best investment people can make, better than in any apartment building, is you invest in yourself by going to conferences and mentorships and masterminds. And that's what I did. And I started that journey in 2002. So it's been 21 years.
So knowing what you know today, would you have gone the college route, or would you the college education, or would you have gone with the street education?
Well, that's kind of a double-edged sword, because like on one side of the coin, I truly believe that like everything you've done up until this point in life is part of what got somebody here, right? Like, so I can make the argument to say, if I didn't get the engineering degree, if I didn't get the MBA, maybe I wouldn't have been so frustrated, and maybe I wouldn't have hit rock bottom in terms of my career and my confidence. And so maybe I would have never found real estate seminars, or maybe I would have never picked up the Kiyosaki book. So from that point, from that perspective, everything happened the way it was meant to happen. Yeah, but I could also say I never really used my engineering degree and my MBA to do real estate investing and to make a lot of money. And for people to know my story, my net worth was like $700K after 14 years of corporate America. Now it's 100 times that from doing real estate. So I could also make the argument that I wasted a lot of time doing formal education. So like, I don't have kids, but if I did, I would probably encourage them. And this is where the true answer comes down. I would probably encourage them to be entrepreneurs. And, if they had a burning desire to go to college, I would support them, but I would not push them to go to college just because it's the right thing to do. Like, I don't think college is the right thing to do for everybody. And I don't think you need to have a college degree to be a millionaire entrepreneur. So that's my answer.
I totally agree with you. I think there's certain discipline that you get for, finishing the degree in college that could last with you for a lifetime. So you've been involved in so many deals now. Let's go back to that very first deal that Brad Sumrok did.
Oh my God, it was in 2002 in Pasadena, Texas, 32 units. I can remember it like it was yesterday. And here's the thing, it was just under $1 million. So my loan amount was about 800K. I put 200 down. I bought the deal with my own money. I did not syndicate my first 2 deals. And why? Because at the time, my mentor was not syndicating deals. He was buying deals with his own money. And so he taught me to buy deals with my own money. And my own money was limited. And by the way, that's one of the reasons I love syndication now, is because you're not limited with other people's money. You're limited by your own money. But back then, that's what I was guided to do and mentored to do. So my mentor said, Brad, take as much money as you have and buy as many units as you can with that down payment. So I took 200 grand. It was my life savings in corporate America. And I bought 32 units in Pasadena, Texas. That property put like $4,000 a month into my bank account, almost like clockwork. And by the way, the interest rate was 6.375%, which is higher than it is today.
That's right. You know, I think people are just getting a little bit of a sticker shock on the interest rate, right? Because we got spoiled with low interest rate for a while. So that first deal that you were involved in, did you hit any road bumps or, was it smooth sailing for you?
Well, I mean, yes and no. I mean, look, it's work. Like, there are challenges that have to be overcome. I still had my job. Okay, so I was working in Houston 9 to 5. And I was even traveling internationally 20% of the time. And then I had this 32 unit apartment building. So very quickly I took one of my residents that had lived there a long time and I made her the manager and I gave her free rent and she collected the rent. And then we also found a guy that could do maintenance part-time. But that was a challenge because the first 2 or 3 maintenance people we had, they didn't show up or they'd show up drunk or they didn't do work. And I found myself on weekends going to Home Depot and I'm just like, oh my God, what am I doing here? Like, the only tool I know how to use is a wine bottle opener. Like, I don't know I don't know anything about Home Depot. And so there were some challenges there. But once I found a reliable maintenance person and a reliable person that could be on site, my manager lived on site. And so I made her the manager. It helped me a lot. And I paid them really well because I knew how valuable they were to help me run my business. I mean, look, I still have a job. I'm traveling. Like, my maintenance guy made $12 an hour at his full-time job. I paid him $20 to work for me part-time. Mm-hmm. So you know what he would do? He would leave his job early and come work for me because I was paying him 50% more. But it was worth it to me. You know, it was worth it to me to pay my staff so that they could do things that I didn't have to do. Does that make sense?
Yes. I want to touch on something you said. Yeah. And then we're going to go to syndication here. So you had something of value, a place, and which you could offer for free to your property manager. And then she stayed there and she got the value out of it. And she helped you in turn to manage your property. That was a very good trade, in my opinion. But let's talk about syndication. Since everywhere we turn now, it's all about syndication. Years ago, not many people talk about it. So maybe explain to us in plain language, what is syndication and how it works?
Yeah, so look, syndication is when we raise money from other people that want to be passive investors in apartment buildings. And we need to follow securities laws. Okay, so there's rules and regulations that we need to follow and understand and adhere to, but they're not hard to do. And all you really need to do is have a good attorney on your team. But let's just take this example. If I have $200,000 to invest, right now I could buy an $800,000 building. Okay, and maybe that's going to get me 8 units if I buy it myself. Okay. And now I have no leverage, like 8 units. I just bought myself a job. You know, I'm not going to have a full-time manager and maintenance person. I'm going to have to do a lot of mom and popping, right? If we look at Kiyosaki's cash flow quadrant, SBI, and you go buy an 8-plex, you're an S. You do everything yourself. You collect the rent, you do the books, you do the evictions, you do the leasing, you do the make-readies, or you hire handymen, but you still have to be very hands-on. So that's one option if you have $200,000. The other option is you could put $200,000 into deals as a passive investor in a syndication, right? And now you don't have to do any work. You don't have a job. You're an investor. You get tax advantages. Or you could take that same 200,000, and if you're part of an investor community, if you learn how to raise capital, you could take that same 200,000, but now imagine you could raise 2.5 million from other people. You could go buy a $10 million deal. So you could put in 200 and you could raise 2.5 million from 20, 30 other people. And how do you do that? That's another question, but you got to be part of an investor community. You got to get to know people. You got to go to networking events. You got to learn marketing and branding and advertising. And that's a whole other conversation. But the reason it's powerful is now with that same 200,000, I could buy a $10 million building and I could hire professional management. And so by syndicating, you could scale, you could help yourself more, you could help more people, you could help your investors. You can help transform communities because we're doing renovations and upgrades on these communities. So everybody wins on the syndication model.
Yeah, that sounds wonderful. So if syndication is a puzzle, explain to us the pieces in that puzzle to complete. I'm sorry for this interruption. I've been asked a lot about passive investment. And let's be real, there is nothing passive about being a landlord unless you have a really good property management company. So if you own an Airbnb or a short-term rental and you want to get back your time, please give our team at Buzz Vacation Rental a call at 281-549-8432 or go to our website at pm.buzzvacationrentals.com. Now back to the Real Estate Ballers show.
Yeah, I mean, it's a team sport. So number one, it's like you need deal flow. So you need to call brokers and get deals, and you need to be able to, where do you get the deals from? And then you need to analyze the deals, and then you need to secure the debt, and you need to raise the equity. And I'm giving you a very simplified version because, raising the equity could be challenging, and you have to, the best way to raise equity is you join investor communities because now you're with hundreds of other like-minded people that want to invest. And then slowly over time, you can start your own branding. You could do your website and create an ebook or do Zoom meetings and do webinars and create a social media presence and all that type of stuff. But that doesn't happen overnight. So the quickest way to start getting people that want to invest together with you is to join communities. Join mentorship programs, real estate clubs, masterminds, and stuff like that. Because syndication is a team sport. Syndication requires raising money from other people. Okay, so that's the biggest nuance. And then you got to be able to hire a good management company and work with a management company closely to manage the asset. So I'm sure you've seen some of the failures that are happening right now with syndicators. There's articles in the Wall Street Journal, and one of them was my former student. He had some early success, but he started buying really big deals with really aggressive strategies, and he wasn't sophisticated to the level he should have been. He probably didn't have a strong enough individual team around him, like his employees and his asset managers and his property management company. And he probably made a lot of mistakes. Okay. But there's a lot of businesses that lose money. There's banks that are failing. One bad apple doesn't make the industry bad. So for anybody listening out there that's aware of what's going on with all that, just remember there's been so much good created by syndicators. People have transformed communities. We're impacting working class people and making their life better. We're doubling the money of our investors a lot of times, not all the time, but we're making a lot of people a lot of money and helping people become financially free, getting better lives for ourselves and our families. So there's so many wins going on, and the media doesn't cover that. They cover here's the example of something bad that could happen.
That's right. That's something I tell people is don't chase the headlines, because real estate is local. But I do want to ask you, with your expertise, Brad, so in a syndication, who is in control? So
I'm going to give you, there's two types of investors in a syndication. There's the general partner and there's the limited partner. So the limited partners are simply putting up money and they have no day-to-day control of the deal. The general partner has all the control of the deal, okay? And the general partner also is putting up money. So the general partner puts up money, the limited partners put up money, but the general partner has the control. Now, the next level is there could be one general partner, or there could be like me and you could do a deal and we say, hey, we're going to be co-general partners. Or maybe we have 3 general partners. And so what determines how many general partners you have is like, how big is the deal? What is everybody's skill sets? How much money needs to be raised? What does every general partner bring to the table? Some people could do the asset management. Some people could find the deals. Some people might analyze the deals. Some people are better at raising the money. So like the reason I like having multiple general partners working together is because together we could do more. We could do better. We could do bigger. We could solve more problems. We could help more people by working together. The general partners have control of the deal.
So the general partner is also the person or the parties who bring this deal together. They go and find and chase the deal.
Yes. At least one of the general partners is the person that found the deal.
Okay. So like I said, the syndication tool seems like a really wonderful tool for people to get in, right? With, if you're just a limited partner, you don't even have any knowledge of real estate and you don't even need to invest your time. Tell us where things could go wrong. Because I'm thinking of a million things in my head right now. Like, what if the general partner has limited experience, like you said, or, get too ambitious, or if there's disagreement between the parties? Like, tell us what happened when things go wrong, or, what do you see go wrong?
Well, I've been in this business in 2008, and I've seen people lose deals. And I was actually putting the slide deck together for, I'm going to be in, as you know, in Canada, and it's funny. I'm just going to read some things from my slides here. Who lost money in the 2008 recession? Well, some people lost money because they had really high leverage. Okay, back in 2008, I remember lenders were loaning like 90 or 95% of the purchase price. That's very risky. Okay. Number 2 is you could be in what I would call a bad market. Okay. If you're in a low income area, a high crime area, a market that has negative job growth and negative population growth, if you're in a market that depends on one employer or one sector, like if 80% of the people in your market work at a military base and the government shuts down the military base, you're in trouble. If 50% of the people work at a automobile plant and they shut down that automobile plant, you're in trouble. Okay, so you want to make sure that your leverage isn't too high. You want to make sure you're in a good market, which is moderate income, low crime, positive population growth, positive job growth, and not dependent on one major industry or employer. And you also want to make sure as the general partnership team that you have enough cash reserves when you raise money, that you raise extra money, but they also have enough personal liquidity if they need to, okay? And their experience, okay? They should have, if they're doing big deals, they should have bigger and stronger teams. And that's something I've seen people do is they have like they have a very, call it a weak team, but they're buying big deals with complicated structures. So what I've seen people that I would call advanced beginners that maybe get 1 or 2 deals under their belt, and then they go after 1,000 units and they don't have the right team and they don't have the right infrastructure. But I can tell you when times are good, the lenders will loan the money. The private equity people will add to the capital stack because everything looks great. And then some of these advanced beginners are going to be in trouble, and that's what's happening right now.
Yeah, they bought one successful deal and then they think they know everything, right?
Yeah, or they just get they get ahead of their skis, or they just make really bad business decisions. What I always tell people is you got to get to know the people you're investing with. If you're going to have co-general partners, take the time to get to know them, their track record, their finances, their values. And the same with passive investors. You should get to know the general partners. Who's in control of the deal? What's their experience? What's their track record? What's their liquidity? What are they willing to do? And what is their team willing to do and able to do if there's a downturn? So these are some of the things, these are some of the mistakes that people have been making that are going to cause people to lose money.
So are you anticipating a downturn in the multifamily space? And this is why I say this. So 2 years ago or so, right, syndications get really popular. And a lot of people got in at the time was interest rate was low. So they put together, they acquired the property, and now it's time to refi so that, to get into a long-term loan. And interest rate skyrocketed, jumped up significantly. Are you seeing problems on the horizon? Hey, if you have any questions or comments, please leave them below.
The short answer is yes, there's going to be a lot of problems. So like people that are in those deals, they need to figure out how to solve those problems. Like they need to figure out like, when is my loan due? What are my options? Do I need to do capital call? Could I sell it? Could I refinance it? So people that are in those situations, they need to make sure they're anticipating and not just waiting to the last minute. But there are going to be some problems. And again, the people that are going to get through it are the people that have the most experience, the most liquidity, the most resources. And some people they have very low financial resources. They have very low resources in terms of their experience. And they're just going to go into fear and anxiety, and they're not going to have a plan, and they don't have a strong team around them. So like my message there is like, again, I saw it happen in 2008. I'm going to see it happen now. It's like the same people that lost their deals in 2008 are the people that are going to lose their deals now. It's people that got over their skis. They're low in liquidity. They're low in experience. They're highly leveraged, and they bit off more than they could chew. And it was the same thing in 2008.
How big do you anticipate this problem to be?
Well, it's hard to say. But I think it's going to be big, but I don't know how big. I think there's going to be a lot of deals that are a lot of loans that are becoming due in 2024. And if there is a good news, if there is a silver lining, it seems like the interest rate increases are slowing down and will probably stop and may even reverse. But what happened over the last 12 months has been unprecedented. So a lot of people right now that got into these loans, I think the environment for refinancing is going to be better next year than it is right now. I think a lot of people are going to need to do everything they can to get through the next 6 to 12 months.
I totally agree with you. All right. So as I'm a new investor looking to get into this space, I want to be sure that I'm protecting my investment. What advice do you have for me?
Are you saying like you're new and you haven't invested yet?
Yeah, I got some cash set aside. I'm not going to be the one put the deal together.
Yeah, again, I would say invest with experienced people that you get to like and trust. And honestly, I would even say trust. You don't even need to like them. Invest with experienced people that you trust. And verify them. Like if they say they've done so many deals, like you can't just take their word for it, because everybody right now is going to have a resume that looks great. So like get to know people and get to trust people and get to understand some of the basics. And that's why I'm so passionate about education. Some of the gurus will say like, oh, don't invest in a mentorship program. That's just $30,000 that you could be putting into a deal. And I'm like, yeah, but you put the $30,000 into your own education, and it's going to serve you for the rest of your life. Like that's what people don't see. It's like that. The investments I made in mentorship and masterminds and the content that I've gotten and the lessons learned are not just for that 1 year that I was in that program. It's for the whole rest of my life, because it's teaching you concepts and fundamentals and principles and best practices that once you have that information, nobody could ever take it away from you. So my best advice to people is get involved with real estate clubs or mentorship programs. Get to know who the top people are. Like when I say the top people, I mean who are the most successful students that have been around for a while, and what resources do they have, and how would they handle a downturn? How would they get through a drop in occupancy, or if the insurance triples, or what type of debt do they have, and when is their loan due? And so these are important things that passive investors need to know so they can protect themselves. Like passive investors, you are responsible for the investments that you make.
Yes, do your own due diligence.
Yeah. And so get educated.
I'm a big believer in educations. I think it's totally worth it to join group, because it's the knowledge, the collective knowledge that you gain that you just can't learn from YouTube or, podcast, right?
It's true. It's like there's no substitute for being around people that are doing what it is that you want to do. Like you can get bits and pieces from books and podcasts and blogs, but that's not gonna get you through like a challenging situation. It's the network of people and how many resources you have that's going to get you through that, and it's going to elevate you up faster.
So, Brad, what are some of the biggest challenges that you see today for people who are getting into this multifamily space?
Well, there's two things right now that they're starting to lessen a little bit. One is the last 3 months, there have been like almost no deals on the market because the debt, I would just say the last 3 months, getting new debt has been the biggest problem. Every other month, the Fed was raising rates. And so lenders, they don't know how to price their debt. And so they were just making it super expensive. They were like, well, we don't know. All we know is the rates are going up, up, up. And if we lend money, it's really risky. So all we know is Jerome Powell just keeps talking about he's going to tame inflation. He's going to keep rising rates until we hit 2%. We have no idea what that's going to look like. So let's just make, when we do a loan, it's going to be at a very low amount. It's going to be a low dollar amount at a high interest rate. And so that's been a barrier. And so because of that, buyers don't want to buy at the prices sellers want to sell. So for the last 3 or 4 months, there have been very few deals on the market, but now we're starting to see debt is stabilizing. The rate of interest rates has slowed down. Everybody believes it's actually going to reverse and the rates will start going down. So now we're seeing lenders coming back with pricing. You're getting more loan dollars today than 3 months ago, to lower interest rate today than 3 months ago. So we're seeing the debt becoming more stable. And now we're going to see more deals coming back on the market. So I'm seeing that right now.
Okay. So keep my pocketbook open to buy deals next year.
Yes.
Okay. So as we are wrapping up here, what is one fun, exciting fact about Brad that you want to share?
Oh my gosh. Well, I love doing things to keep me young. So I have a one wheel, which is a skateboard with a motorized wheel in the middle. Have you ever seen it? It's like this big wheel that you balance on. It's like a motorized skateboard that like a teenager would ride. And I have one of those. And I also have a flight board, which is like a surfboard with an engine on it. And I could ride on the ocean with my remote control of my hand. And I could surf on the ocean on like this surfboard going 20 miles per hour. And it keeps me young.
All right. So last question of the day. People will, learn a lot about what you shared today and they want to get in touch with you. How do they do that?
Well, there's a couple ways, and I'm glad you asked this question. So number one, we do have a 3-day event coming up in August, and you can find that out on my website. So you go to bradsumrok.com, and that's BRADSUMROK with no C.com, and just go under the events tab. And our annual Apartment Investor National Conference is coming up at the end of August. It's in Dallas. We've had Grant Cardone, Jesse Itzler, Ed Milet, Damon John, Robert Kiyosaki. We always have like an A+ speaker list at that event. So that's an event that like every aspiring multifamily investor needs to be at. And then the other way is just Brad Sumrok on social media, Instagram, LinkedIn, Facebook. I spend way too much time on all of those platforms. So you can just track me down, send me a DM, or just go to my website, bradsumrok.com. Thank you for asking that.
Hey, if you got a tons of value out of this episode, please don't forget to give it a thumbs up and share this with a friend or a colleague who might also benefit from the insight that we share today. And of course, be sure to subscribe to the Real Estate Ballers Show for more great content on real estate investing and other exciting topics. Thank you for watching, and we look forward to seeing you in the next video.